I do, I just wanted to say to if it's whoever's organising the meeting, we've got a lot of papers. Are we intending to put them up on the screen or for people to follow? I have all the papers in front of me on another computer and also printed out, but I don't know how everybody else deals with this. Whoever's in charge from Warwickshire of doing this, I don't know whether it doesn't sound like they're intending to put the papers up on the screen. So we'll move along, starting off with the paper. Yep.
Chair, this is Sean from Warwickshire Pension Fund. I'm not sure about putting the papers up on the screen. I'll check with Jill, who is the administrator. However, I'd like to just say that we are now recording and live streaming this particular meeting.
Thank you very much. And when we come to the item 9, that's when that will go off, of course, after item 9.
That's correct, Chair.
Right. Thank you. So just as an opening remark, we've covered it, I think, in the funds only meeting because Mel raised the point, but I wanted to say again, we understand that Eileen is still unwell. She's at home. She's got apparently long COVID. She's not having a good time. So I assume you will all join with me in asking Ian or Wilf to send our best regards to her and her family, and we hopefully she'll be back at some point or other. I have discovered she's not up for election this year, which is probably a good thing in the circumstances.
Yeah, we'll pass on your best wishes.
Thank you very much indeed. Apologies, declarations of interest. I've had no apologies that I'm aware of, Ian.
I don't think I've had any either, Tim.
No, well, other than Eileen, obviously, and then welcome to Wilf again. And any declarations of interest? No. The minutes of the meeting held on the 24th of November, they're on the papers from pages 1 to 8. Do we have any comments on the minutes? I'm seeing none, so I'm assuming that we can. I don't know whether we signed them. I can't remember if I've signed the minutes before, but I think we can take them as being agreed. Item 3, therefore, is COVID-19. It says for information and discussion. I think obviously, Rachel, we're looking to you to let us know how things are going with your co-workers and staff. And as far as I know from the funds only meeting, other than what's already been said, everybody else is fine. Some jabbed, some not. But how is it impacting things for Borders to Coast, Rachel?
I think probably like most others that we welcomed the schools reopening this week. So I think everyone's looking forward to some sense of normality in home life. We're continuing to work successfully from home. But I think hopefully as if things play out in the way that the government have set out in terms of return to office, we'll be looking to start to reopen the office and get people back over the course of the next 6 months. But we're certainly continuing to remote work 100% until at least after Easter.
Presumably, Rachel, if I read it correctly, you can't really do anything until May the 17th at the earliest. Is it almost supposing it goes according to the plans? Is that right? Or is it going to be in the 21st?
So we can use the office if we need to, because obviously we are financial services and we are doing things that are obviously managing significant sums of money on your behalf. So if there are things that mean we need to be in the office, we can do that. We could do that now. But obviously, the very clear guidance from the government is that you should work from home if you can. And we think that our organisation can work from home for the vast majority of things that we do. So, as I say, I'd expect that we will be continuing to work remotely until after Easter. And I would imagine, as you just outlined, in line with starting to think about coming back into the office May, June time.
Okay. So obviously we hope that can come sooner rather than later, but it probably won't. I can't see that anything is going to be earlier than is set out. Maybe we all get back to normal sometime soon. It'll be good, won't it? Does anyone have any further thoughts on COVID. I think it's terrible, isn't it? We all kind of got used to it. Nick words.
Yeah, can you hear me?
Yeah.
Yeah, I just wanted to make the point that even though Teams has been a godsend for transacting business over the last year, and we wouldn't be able to function very well without it, it is limited. I find that its effectiveness as a tool, and therefore our effectiveness as a joint committee with our governance functions, is restricted by this means. So I'm just wanting to make sure that there are steps in place to move away from this format as soon as we can, whilst acknowledging that it may indeed be an appropriate format for certain meetings. For what we are doing here, I personally don't think it is. Is there a plan for moving back to face-to-face meetings for the big quarterly joint committee meetings as soon as is safe? Thank you.
Thanks, Nick. Before I come to that, I've got George and then Doug.
Yes, Chair. Just to respond to that point, the regulations which allow for joint meetings of local government act committees, such as the Joint Committee, lapse prior to the May elections. So unless the government make further regulations, we will have to have meetings in person in some form. There will be some challenges in how to do that safely for a meeting of this size. So we will have to give consideration to that when we know what the actual situation is, and we don't at the moment, and that's something that all the local authorities represented around the table will be dealing with in their own local context as well.
Okay. And Doug?
Thanks, Chair. On the back of what George has just said, the regulations do lapse in May. I have made representation through my local authority in that it's not proper to not continue with online meetings as we've been so used over the last 12 months, and we've made representations to make sure that we can have either or. There will be some requirements for face-to-face meetings without a doubt, but not to preclude people from joining a meeting on a rather digital platform. I see no need to be going all the way to Leeds for a meeting where the business is understood from our perspective as a client, and that be the choice of that client, and that is something that we would hope to take through all our formal council proceedings locally. So an either or, so it doesn't preclude going face to face, but equally so it doesn't insist that you have to go. That's my preference. Okay.
So it seems extraordinarily unlikely the government is going to say you can't have remote meetings like this while we're still partly in lockdown, and that doesn't finish in theory until June the 21st, and our next meeting here is June the 11th or 12th or something like that. It's definitely before June the 21st, so it seems difficult to understand that we'll be able to do that without being, if not all remote, mostly remote. After that, when we get back to it, then it's interesting to see whether they'll allow us to do so, but so we shall see. Will?
Yeah, I had a discussion similar with an officer at South Tyneside yesterday, and we were looking ahead, but we speculated that if the government just decided, say June, July, that's it, virtual's finished, we would have officers who haven't had the vaccination because of their age, their fitness and so on, and we couldn't expect them to turn up at a virtual meeting if they haven't had the vaccination. So there's that side to look at it as well. But we also know, as was said before, there's lawyers queuing up to challenge when it is removed.
Right. I'm with you, Will. Chris Hitchin, good morning to you.
Morning. Well, as Doug's already said, you are the client, so we'll undertake to meet with you in whichever way suits you. I would just make two brief points. I think for the informal shareholder meetings, which have traditionally been coupled to these. We were discussing last week, it might actually be better to carry on with virtual meetings on a different day, just because that gives you a bit more flexibility. But we'll consult on that. I would just say last year we did try one board meeting at Board of the Coast where we had some people on video and some people in the room. This was sort of in between lockdowns. That presents a completely different set of challenges and is also quite difficult to make work. So I think we have more to do to find the optimum format going forwards.
I know that we've had full council meetings, the Surrey County Council, where the people who are conducting the meeting, about 3 or 4 of them with the sort of secretarial committee staff, are all in the same room in the office, and everybody else, which is the other 80 of us, are in our own homes. So that seems to be a kind of partial solution. Whether it works well is up for them to say, but it does seem to work. Ian?
Thank you, Chair. Yeah, it's largely just to reiterate what I think Chris said there as well. I think hybrid meetings, there are a number of challenges around that. We just haven't quite got them yet. The idea that people can either travel or not, I think sounds very simple in concept, but I think it's more difficult to try and achieve. And I think we would all love to get back to what I'm going to call normal, which is where we're all travelling and we're all able to meet in person. And I think we will get there. But I just think we have to be careful and just make sure we're considering the health issues and well-being issues as a paramount thing until we get through all of this. So I wouldn't want to set any deadlines of when we're getting back. I think we have to just adjust and adapt at the time.
Yeah, well, yes. With all of this, we're just sort of taking it as it comes. Thank you, Ian. Chris, you still got your hand up? You want to come back on that? No.
Sorry, no, it's legacy hand.
Legacy hand. Right. If there's nothing else further to say on the subject of COVID, as far as this meeting is concerned, we'll move on to item 4, which is a schedule of future meetings. George, this is your paper. I think it says it's for information and read only. Does anyone want to make any comments on this paper? Otherwise, I'm quickly going to Rachel, right?
So just a very a practical one, just to clarify. Tuesday, the 14th of March 2023. It says the 14th and the 7th, but I think the 7th was a hangover from a previous one. So just clarify: is it Tuesday, the 14th of March 2023?
Okay.
That's correct, Chair. It's the 14th. As Rachel says, a small issue with version control.
Thank you.
Okay. Hopefully by then we'll be able to meet together. So I'm going to take that one as read. Item 5, the annual elections. Again, this is your paper, George. I think there are a couple of points I think that people wanted to make on this report before we come to the recommendations. So I'm going to throw this one open. Do you want to? Sorry, George. Do you want to say anything about it first?
No, I think the paper's in itself is self-explanatory, Chair. I'm happy to take any questions, or I understand from the funds only meeting that some members may have points they wish to make.
Indeed. So I think that Nick is first.
Yeah, thanks, Chair. Deirdre and I we had concerns about the proposals for the scheme member representative election cycle. We felt that the current arrangements were a little bit disruptive, and what we want is for the arrangements to be as smooth and uninterrupted as they can be, which means thinking about when the member takes up office and how long they take up office for and how much disruption is caused by it. I think that the option that would create the least amount of disruption would be preferable for us. So people starting and finishing probably at the same time, and maybe a 2-year term is a bit on the short side. I mean, as at our local pension board, we sit for a term of 3 years, but that's a matter for everybody else. And what was the final? There was something else that I had to say. Yes, if I've read the documents correctly, it seems to be the case that somebody who isn't a member representative on a local pension board of a member fund could also, in theory, be elected to the scheme member representative role. Now, if I've misunderstood that, great. But if I have understood that correctly, then I think we would be concerned that somebody who isn't a scheme member representative on a local pension board of a partner fund would be permitted to take up the role. That's what I wanted to raise. Thank you.
Chair, on that last point, could I just confirm that the intention is that that the individual must be a member of a local pension board?
I heard raised as such as well. That's what I thought it was. Are you happy with that, Nick? I think that it definitely needs to be a member of the local pension board, scheme member of the local pension board.
But it was the annex to one of the papers on the governance document. I think seems to imply that it doesn't have to necessarily be an actual local pension board member. That it could be somebody nominated by them who isn't a board member. But have a look at that anyway.
Okay, I'll throw that back to George if you did.
Chair, if we can take that offline, we'll sort it out. But the intention is clear.
Thank you. Deirdre?
Hello, yes. Just to back up what Nicholas said, I mean, I think a year, the suggestion of a year is too short because it takes a person quite a while to settle into the workings of the joint committee and to get to know people. And then to be booted out after a year, I think is a waste, really. So, you know, I would welcome looking at, if you want to stagger it, looking at maybe a 3-year, 2-year term.
Okay, thank you, Mick.
Yeah, I was just going to recommend and suggest that we went to 2-year and 3-year, and then when we get through that cycle, it'll be on opposite years. Therefore, it will then become 3-year and 3-year, and I think that'll be common sense. So I'll move that.
Okay, thank you. Before we come to that, Doug?
Yeah, Chair. I just wondered why we're focusing on scheme member representatives in the context of what's described, which I'm fully supportive of, might I say, Nicholas and Deirdre. I mean, I've no issue with it, but the chair and vice chair appointments are a very short life. I can't even remember, but I think it might even be an annual appointment. Maybe I think it's 2 years, actually. Yeah.
Is it 2 years for the chair and vice chair?
Yeah. So if you're reviewing, if you're reviewing appointments, I would encourage you to consider also the chair and vice chair as well.
I think I'm looking at George, but I think the chair and vice chair are 2-year appointments, aren't they?
Yeah, they are, I believe.
No, Chair, they're annually elected and may hold office for 2 years.
Yes.
The practice up to now has resulted in a 2-year term.
So we can be kicked out, and as we'll come on to, we can be kicked out, but at the same time, if people want us to stay, we can stay for 2 years. But
that would be in line with the usual practice in a council where chairs are elected at the annual meeting.
Absolutely, yeah. I've got Chris Hitchin, and then Ian, and Mark.
Well, Chair, I don't think I was next. I'll wait my turn.
Yeah. Well, I'm reading, yes, because of the partly in alphabetical order. I'm not sure who was next, in which case you better go, because I'm...
All right, well, merely for the avoidance of doubt and for completeness, the points that were made about member representatives in terms of playing themselves in, learning the role, etc., do apply equally to the Board of Coast board, of course, where we have to train people up on FCA regulation, etc. So without wishing to lead you in that direction, I think we would see some sense in lengthening the terms there as well.
Okay, Ian?
Yeah, sorry, Chair. It was just to try and put some of this into context. There was very clear direction when we first set up the joint committee that we didn't want over dominance by one individual fund on it, and that's why part of these things were, elections individually to the the role of chair and vice chair, and then only serving 2 terms. And as I think as George has pointed out, everybody is probably elected back to their pensions committee on an individual year, so you never know whether you're going to be on the joint committee anyway, to an extent. And then Chris is quite right that he's raised the issue of the non-executive directors, but this is an issue that was discussed, I think, at length at about 1 or 2 meetings ago, and it was determined to leave it at the 2-year cycle. That's not to say we can't change it and and have another discussion around it, but I'm just conscious it seems to crop up over and over again, and when we sit down, we decide that we're broadly comfortable with the current approach. Yes,
I do remember that we went through it at very considerable length, discussing these things backwards and forwards. Before I come back to the scheme member aspect, Mark Davidson.
Thanks,
where are you, Mark?
I'm here somewhere. Thank you. The only thing I've got to suggest is that I think we should try and align the scheme member representatives election and the chairman's election at once, because I think that you're coming in as a scheme member representative, you're not necessarily, about your pension board, but it doesn't mean that you necessarily know how sort of local government works and how this works properly. And if you come in and you've got a chair for one meeting, and then after that one meeting you get a different chair that works in a different way, then I think that could be off-putting, and that could sort of slow down your development. So I'm thinking that if you could have both the chair and the scheme member representatives coming in at the same time, then they've got that whole year to get used to the way that chair works, because I don't know whether anybody else will see it, but the way John did it was different to the way Doug did it, which is different to the way you do it, if you know what I mean. So if we get them all sort of aligned at once, I think that would be better for the scheme member representatives to get a good start. Thank you.
So we could have the scheme member representatives just come in September, is what you're saying, rather than in June.
Yeah, just extend the thing by 3 months. Yeah.
Okay. Right. So are we? I think there's been a lot of discussion around other things, but as far as the scheme member representatives are concerned, Mick has moved the idea that we accept what the 2-year and 3-year thing to get it onto a 3-year cycle for the scheme member representatives. Is everybody happy to do that? Is there any pushback against it? It seems to me to be reasonable if that's what they want. And I do take the point that it takes a bit of time to learn what it's all about. So 1 year is really not enough. So are we happy with that?
Happy.
Yeah.
The only observation that I would make not on that point on the things is, as I've said to the funds only meeting, and as I think Boards of the Coast knows, I am standing down at the coming elections in May. We will therefore have in June, there will be a new chairman, which, as I understand it, should be the vice chairman, which is David. Well done, David. David has pointed out that he's up for election, and he doesn't know whether he'll still be on the pensions committee. Even if he's elected, will he still go on to the pensions committee, and will he be chair of it? So there is a certain degree of uncertainty in the air as to how the next meeting will be chaired. I'm sorry about that. And I got a couple of comments, Doug, and then Mark.
Chair, I don't know if I want to give way to Mel, and if he wants to say what he said in the last meeting. Is Mel?
Yeah, you see it.
Mel, do you want to repeat what you said last time rather than me saying it, and then I can second it? And we're in a formal setting now. That's all I'm thinking, Mel.
I'm sorry, I dropped offline on halfway through this conversation somehow. I didn't hear half of what was said. Okay. Are you able to hear me?
Yes.
Yeah, yeah.
You can hear me?
Yeah.
I couldn't hear most of the conversation that was going on. I've been fiddling around with this laptop.
Okay,
so
if
are you aware of what I was saying, Mel?
No.
Okay. Well, we've gone through the election discussion, etc., and Tim's just made a statement that he'll be standing down from council. And so I was going to make that formal proposal in the formal meeting that you did. So rather than me doing that, I was inviting you to repeat what you said.
I see.
Yeah.
That's fine. Yes. If I could further embarrass you then, Tim, I would like to propose a vote of thanks for the work that you have done as chairman for this committee over these last 2 years, isn't it? So thank you.
I've only been chair for a year, I think. It seems like 2 years, I agree, but
Yeah.
And I'll second that for me.
well, thank you very much. I'm to the extent that I can, I'm blushing prettily at this end of the camera, and so thank you all for your support. It's been an interesting experience in a whole variety of ways, and very fulfilling too. So I haven't half learned a lot along the way, as you always do with these things. So thank you all, and thank you for your support. So could I therefore go back to the scheme member suggestion? That was agreed. We've done that, haven't we? Is there anything more to be said on this then, George? Item 5, are you clear as to where we are?
Chair, you need to make a decision about Councillor Davison's proposal, but whether you would like to align the electoral cycle for the chair and vice chair with that for the scheme member representatives.
It seems to me to be eminently sensible. I would go along with it. I don't know about others. I can see the sense of what it is. Does anyone have anything to say against Mark's suggestion? Can we adopt that then? Is that easy to do just like that, and just basically just shoving it back 3 months, aren't you? Yeah. Good. We are agreed. So I'm moving on to item 6, the joint committee budget. I'm not anticipating profound discussion on this item, but you never know. The paper is in front of you. Ian has put it out there. The decision, he's saying, let's carry on as we've already been doing. You'll find the paper on page 27. Turning my pages over.
Chair, can I just ask a question? It's John Holber here.
Yeah.
If anybody's used to using this egress thing, how do you stop it? It doesn't seem to want to. If you don't touch it for a while, you sign out rather rapidly. Is there some way of extending the amount of time before you sign out, before it signs itself out, or am I the only one who's having that problem with it?
No, mine is signed out as well completely, but I think it comes back on, doesn't it, when you just turn the screen on again? Well, I've given up on it, which is why I printed all the papers off.
It seems like you have to sign in again. You know,
Chair.
It's not, but it's go on, yeah.
Chair, if I can, I'll send you the PDF file, John, right now.
Okay, thank you, Dad.
Well, the egress files, we only had those because of the part 2, the items, didn't we? So because they're not on the public domain. So I managed to open it and get access to them. Oh, there you all disappeared. But okay, so I can't do anything more about that technical problem. Do we have any comments on item 6, or can I just take that as read and we can move on? Not hearing anything. So item 7 is the governance charter update. Racial. I'll just get to the right pages. I feel as though we've been around this on more than one occasion. There are very few changes to the governance charter. It is reviewed on an annual basis. We have reviewed it. The changes are marked on it. Does anyone have any comments? I don't really think, Rachel, that you need to spend a lot of time talking about it.
Agreed, Chair.
So I'm just picking up my agenda, which has fallen on the floor. Not hearing anything at all, so I'm going to take that as the recommendation. Is we are asked to approve the proposed changes to the governance charter for publication on the Boards of the Coast and Joint Committee websites. Do we have that agreed? Thank you very much. Item 8, the Partner Fund Satisfaction Survey, Rachel, for information and read only. Again, I feel as though we've all had sight of this on for some period of time now, because it was done before Christmas. Does anyone want to make any, Rachel, do you want to make any further comments? As I know there are a number of actions that you've taken following the survey. And does anyone have any other further comments to make at this meeting that they want to record? As I say, it's an information and read only item.
Chair, I'd just like to thank everybody for your continued support, and I appreciate it. It does take a little bit of time to give us your feedback, but I hope you can see that we take it very seriously, that we do take actions off the back of that, and that there is that really important loop. Just like I say, to thank everybody for that, and we'll continue to report against the actions that we've identified alongside the officers, ahead of doing it again in October, November.
Excellent, thank you very much. Well, I know we raised some items with regard to particularly communications in the last meeting, but I don't think we necessarily need to go over them again. So again, I'm just going to take that one as noted. So I think we've now gone through pretty much all of the what's the word I want, the sort of process stuff on the agenda. Item 9 is the market review, which is Daniel, again, it's marked for information and read only. But without making a massive presentation, Daniel, do you want to, I assume you're here somewhere, Daniel, I haven't seen you yet. Yes, he is, yeah. Is there anything that you would like to say before I throw it open for questions and comments?
Yeah, just give a very quick summary, and good morning, everybody. So I think when you understand the inputs, you can make an educated guess on the outcomes. In typical recessions, we see incomes go down and borrowing reduce. What we've seen in this recession is our incomes have been maintained, or in the US, they've actually gone up, and borrowing levels have also gone up. We had record borrowing by corporates last year. And with enforced sort of spending cuts by both those two entities, you've had a buildup of cash on household and corporate balance sheets. Then you've had fiscal stimulation, some of the largest deficits since the World War. You've had monetary stimulation 2 to 3 times what we had in the global financial crisis. And you've had all these things pretty quickly. And if you look at money supply at the minute, it's growing at 25% annualized. So the inputs are very different to what you'd have in a typical recession, and we've seen some quite dramatic moves in the market. So just the section 2.1 just shows the market performance, and you'll see the first quarter performance, the performance in the second to fourth quarter, and the full year performance. So it was a very different, it really was a tale of two halves or two periods. We had a sharp drawdown in the first quarter with a very strong recovery thereafter. And then you've got section 3, just shows that growth is coming in stronger than expected, and section 5, which is showing that equity corporate earnings are stronger than expected. So if you recall from the March 2020 Joint Committee, we talked about the liquidity provision being a buying opportunity for risky assets, and equities, credit and commodities did pretty well in that period. The other two things that I'd mention is just the rotation that we've seen in equity styles. So effectively, expensive stocks got very expensive last year, so went from the 95th to the 100th percentile, which means they were more expensive at the beginning of the year than 95% of their history. And as we reach the third quarter, 100% of their history. And you'll see the graphs on here showing the divergence between growth and value, which was broadly in line with what we saw in the dot-com period, so record levels. And that valuation extreme basically snapped back dramatically in the fourth quarter and the first quarter 21, which we'll come on to when we talk about the performance recovery in our global equity funds. But valuation extremes rarely last for too long. The snapback we've seen has been sharper than I expected. But when you combine that with the vaccine news that came out, and we were following that throughout 2020 So you could see that the phase 1 and phase 2 drug trials were successful. So it was likely that we were going to get some pretty good vaccines in the fourth quarter, and the vaccines ended up having higher efficacy than expected. And that was the trigger point for the market to reprice those more cyclical, cheaper sectors. And then just the third thing I'll mention briefly is just inflation. So we've seen quite a substantial backup in rates in 2021. It's about a 50 basis point increase in UK and US rates, based upon stronger growth and higher expected inflation. And I think there's two key things here. So near term, we've got higher transitory inflation, partly because of the lower base effects compared to 2020. But medium term, we have got probably higher inflation risk, which will affect assets and liabilities. So it's a key risk for the committee. I think no new stories, but just that risk assets have performed well and will likely continue to perform well in a period of excess liquidity. Cyclical and value stocks have performed well as the market has come to remember that we're reopening, and then inflation has picked up near term and presents a long-term risk. And then just got the performance tables in section 7, but we'll go into those in a bit more detail for the funds. Thank you.
Thank you, Daniel, very much for that summary. I'm getting some feedback. I wonder if we could just get rid of that. Patrick, you're the first. I've got a couple of remarks, but Patrick, go first, please.
Thank you, Chairman. Daniel, I'd like to thank you for this report. I thought it was absolutely fascinating. It was well written, it was knowledgeable, it was insightful. I thought a couple of things that came out of it. One was that graph that you provided in 6.1. I think we've had discussions in the past about value versus growth stocks, and that spread between the value and growth indexes is utterly extraordinary, especially when you look at 2018, 2019, where it was nearly level. So I do take your point, and I think, you know, doing that spread where you would sell the growth and buy the value would look like a very good trade to me at the moment. The only other thing, you mentioned inflation. I'm quite concerned about it, but I wonder what your view is in terms of interest rates, because obviously we're coming out of COVID and the government will want the economy to boom to a degree. So it may be reluctant to raise interest rates, but that's going to encourage an inflationary environment. So how do you see that panning out? Thank you.
Thank you, Patrick. So I think what you saw in the 1950s, which is some parallels to today, when economies were over-debted after the war, went through a period of reducing debt levels by letting inflation run ahead but keeping rates suppressed. We're probably likely to see a similar thing. So rates on hold, central banks continue to buy bonds, suppress the level of rates. So we've seen a backup recently. The central banks haven't increased their activity, but I would expect if we saw a further backup that they would buy more bonds. So I think we're in an environment where you get artificially suppressed short and long rates, which allows them to work off some of the debt loads, which probably adds to your inflationary risk going forward. So I think the inflation risk is building. I think near term, the markets are probably too focused on the transitory inflation risk. And I'd be more concerned about the medium to longer term inflation risk and how investors deal with that, which is probably a little way off, but probably is the bigger risk for the LGPS.
Could I just quickly follow up, Tim? Will the government actually encourage inflation because of the amount of debt that it has at the moment?
I think there's the recognition that that's probably the way out of the crisis, because the debt levels are quite unsustainable. So a little bit of inflation will help that be a bit more manageable. I think in the US, they've been quite deliberate about that in saying that they'll let inflation run above target, so above 2%, until they get to a level of full employment. So that's going to take them a while to work off the excess labour. So in the US, they're basically saying we're going to let inflation run above target for a period of time, and we're not going to raise rates. So they are encouraging increases in inflation expectations. I think the Europeans and the UK are a little bit more circumspect, probably will follow a similar policy.
Thank you.
Thanks, Patrick. Thanks, Daniel. Doug, you had your hand up, but it's gone again.
I'm fine. Daniel's just covered it. Thank you.
Okay, thank you very much. I agree with Patrick. I think, Daniel, this is your usual scholarly and sort of learned paper, which is really it is an excellent read. There's a couple of remarks from me. You make some comments about passive equities, and if I read it correctly, what you're saying is because the big growth stocks are the ones that are sort of overwhelming the indices. It looks like index stocks are due for a correction, which is a nice word for saying they're going to go down. But that's only presumably if you're in a market cap balanced passive index. If, like Surrey, for example, you're in a RAFI index, that wouldn't apply. Am I right?
Yes, the equally weighted indexes outperformed the market cap weighted index quite substantially, 2021 year to date. So I think it's probably a 4% premium or so forth. So if you look at the top 10 stocks, historically they've underperformed the index by about 1.5% and traded at the same valuation. Over the last 3 years, they've outperformed the index by 14% a year, and now they trade at a 60% premium. So a market cap index basically concentrates your holdings into those stocks. And when indices get too over concentrated, that's the time where passive management tends to underperform active. And then you've also got the other good part for active management is there's a lot of dispersion at the minute between sectors and within sectors. So when you have high dispersion and highly concentrated indexes, the probability of active outperforming passive is relatively high. So I just wanted to make that comment. And usually the top 10 stocks underperform because of regulation from the top and competition from the bottom. And what we've had over the last few years is a lack of regulation of the tech stocks, which I think is changing, and a lack of competition from the tech stocks because they've been engaging in anti-competitive behaviour by buying any competitors. So again, that's getting a lot of scrutiny. So I think we're likely to revert to the typical market environment where you get competition from above and below, and you're trading at quite a high premium to market. So it seems like the probabilities are tilted in the favour of active management for the next few years.
Thank you. Yeah. And can I just say that I really liked your expression in paragraph 5.5, right at the end of that sentence. You just had one sentence. You said main risk for UK is a premature fiscal consolidation. Should I take that wonderful euphemism to mean he's going to tax us too soon?
Yes. Although so it's quite telling when the US have passed a 1.9 trillion second stimulus bill, and now they're talking about a build back stronger of a couple of trillion on top of that. So huge amounts of fiscal stimulation in the US, and we're already talking about fiscal tightening in the UK. So it does seem a little premature.
Okay, and yes, and I think the government is being pushed on the point, aren't they? Thank you. Has anyone? I mean, this is, as far as I'm concerned, this is a wonderful paper giving background to all of the things that we do. Does anyone have any further comments on it? There are a couple of appendices. I've talked about passive equities. I don't know whether if anyone else has any further thoughts on any of these aspects. Otherwise, we'll thank you, Daniel. Take it as read. Is there? I'm looking carefully at the screen. I'm not seeing any more. So. Thank you very much for that. That brings us to the end of the first part of the meeting, and we now have the exclusion of the public and press. I haven't noticed too many of them to be here, but it does mean that we need to close off the live feed. And